Our next panel today is the ESG regulation data and TCFD reporting, moderated by Marwa Al-Masqati, the Director of Marketing and Business Development at the Bahrain Bourse. Can you please join us on stage? The panelists today are Nedidi Noli Edozain, a member of the International Sustainability Standards Board at IFRS Foundation, who will be joining virtually on the screen, as well as Martin Jansen, the Managing Partner at Netsal Consultancy. Please join us back on stage. In addition to Silvina Braglia, Director of Emerging Markets at Refinitiv, and Manish Dahameja, Chief Wholesale Banking Officer at Sohar International. Have a great discussion.
Hello and a very good morning to you all, and thank you all for joining us today. Thank you for those of you joining us on a hybrid mode, and please join us in today's panel titled ESG Regulation Data and TCFD Reporting, Enabling Investors to Shape Investment Strategies. I'd just like to start by thanking our partners at the Arab Federation of Capital Markets and the Muscat Stock Exchange for hosting this great conference and putting together a great lineup of speakers. And I hope that you've enjoyed yesterday's discussions and the remainder of today's panels. Putting our panel discussion in context of the grander theme, ESG and sustainability are two sides of one coin. In response to the ambitious targets being set by governments and institutions towards a more sustainable future, regulators are responding with a raft of regulatory measures to embed a framework of environmental, social, and governance standards, transparency, and integrity across the investment value chain. In today's panel discussion, we have brought together an esteemed panel of experts to discuss the recent ESG regulation, importance of quality of data, ISSB updates, TCFD reporting, and how that is all important to investment strategies. Allow me to introduce our panelists, starting with joining us virtually, Dr. Nedidi, member of the International Sustainability Standards Board at IFRS Foundation. Sitting next to me is Silvina Bruglia, Director of Emerging Markets at Refinitiv, and Martin Jansen, Managing Partner at Netsal Consultancy, as well as Manish Dahameja, Chief Wholesale Banking Officer at Sohar International. Welcome. So we'll start our discussion with a question that is overlooking the entire ESG agenda, which is the regulations and the latest ISSB updates. So I'll start with you, Dr. Nedidi. There has been a buzz happening around ISSB with several consultation papers being issued, and most recently, re-deliberations in relation to exposures drafts IFRS 1 and IFRS 2. First of all, what are the current proposed regulations by ISSB, and how is that expected to serve the investors over the long run?
Thank you very much. It's a pleasure to be here. Thank you for this invitation. And I was listening to the last panel discussion, and I was thrilled to hear very clearly Lamia say we want to have one global standard, and we want to have our standards. I am honored to follow on such a conversation simply because the objective and the mandate of the ISSB is to build that one sustainability baseline, that global sustainability baseline. And it's the reason why through the entire period in building up S1 and S2, which will be launched at the end of June, or published and launched at the end of June, we have gone through an extensive consultative period, which your region has been a significant and important part of. We've actually also issued 2 additional requests for information, exposure drafts that speak around future standards regarding human capital, human rights, biodiversity, and integration in reporting, which is all about bringing sustainability reporting and financial statements closer together, so more interconnected or connected, and of course also interoperable across different regions and jurisdictions, which speaks to the 2 comments that were asked, which were an ask prior to this panel. We want a global standard, and we want it for our region. And so your participation in these comment requests and comment consultation periods is absolutely critical. Now, S1 and S2, just to summarize what they are, S1, for those who are familiar with the accounting standards, especially the IFRS accounting standards, are like IAS 8 to IAS 1. It's really the overarching framework that allows for sustainability-related disclosures to be published alongside the financial statements. And while there are significant reliefs and proportionality measures that have been built in, for example, not requiring for the sustainability disclosures to be at the same time as the financial statements in the first year, the intention is for these to be published at the same time and to provide thereby decision-useful information to investors that are comparable, that are concise, clear, consistent, across industries, across jurisdictions, which is why the second RFI that is out is on the internationalization of the SASB standards, which are really built into both S1 and S2 and allow, we see them as a proportionality measure so that really from a metrics perspective, you're able to more easily access financially material metrics that matter. It doesn't mean that they're all comprehensive, but they do provide the guardrails around what metrics are critical. What's very important at the moment in terms of what to expect is we have also given a year's relief to get into reporting on overall sustainability disclosures, which is S1, and we've permitted to begin with S2, which is more climate related, within which there are also various transitional reliefs. For example, Scope 3 is not mandatory in the first year. Scenario analysis, which is a very important part of S2, is graded to accommodate for undue costs and effort on the one hand, and on the other hand, also the capabilities of the entities and the preparedness of the entities. So you might have some entities report on scenario analysis qualitatively to start, and as their capacity enhances, begin to become much more quantitative in how those scenario analyses are performed. All in all, because I realize that we're short on time, we hope to deliver to you, to your satisfaction, that one standard that you are asking for and one that is your standard, because you've been part of shaping a standard, unlike with the IASB standards where you have an IFRS for SMEs. What we have built in is the need for this global set of standards to accommodate all jurisdictions, all levels of preparedness, smaller entities, and all regions of the world. And we hope that when you finally have these standards in your hands, that will meet that objective.
Thank you, Dr. Nadidi. That has been very comprehensive. Moving on to Silvina, what we've heard in the previous panel, the repeated theme has been disclosure, disclosure, disclosure. So from your perspective at LSEC or Refinitiv, allow me to use both names.
It's okay.
Can you shed more light on the importance of finding quality data to demonstrate the sustainability of investments and hurdles in relation to data collection as required by analysts?
Yes, so good morning all, and thank you for having me here. It's a pleasure. I think that I can't stress more the point that we have been discussing all this morning about the importance of the data, about that sustainable finance is not trend or fashion, it's already here. And it's part of the financial analysis we conduct yearly, and I think like we have more than 6 sessions of a survey for asset owners all around the world, more than 100 participants in more than 25 countries. And the first question is if they are implementing sustainable finance strategies in their portfolio for risk and measurement and for investment. And 86% last year said yes, they are already implemented. The rest are go into the percentage just 5 years ago, it was less than 50%. So this is very relevant for all the investors. When we ask which is the biggest barrier to implement further is the data availability, and the lack of standardization. So it's still on the top 3 requirements. Of course, is what we are seeing is that data is more available already. I want to mention few important things because you ask about the quality of the data and how it's the process of data collection that we have in place. We have more than 700 analysts all around the world that covering the information. What is our policy and methodology is just to cover public available data. So we base our research in of course, the annual reports, websites, news, all which is important, and we can validate this information. Our analyst has a portfolio of accounts. It's not just data entry. Our analysts that follow the companies, follow the trends, and ask as many as questions to validate this data. And this is very important. Our database collects more than 600 data points, including environment, social, and governance data metrics. So all of this process, I think that it's also important to mention 2 things, that it is not just the annual picture of a company, what is reported. We monitor companies during the year, and we really focus on controversies. So each week, the database is updated with any relevant news about companies. This is a dynamic exercise. It's not just like the picture of what happened last year. The amount of data, it's much broader now, and this is a good news. It's very hard to be up to date with all what is happening. So one of the things that we created is a free of charge tool, contribution tool. So companies can access to the tool with a user and password, and they can send the information straight through. It is not just an email. It is a platform what it is, all the data points are described and have a clear explanation on what it is measured and how it's need to be reported. And this is very relevant because in the middle cap companies, they need a lot of education, awareness, and so on. So it's a good guide for companies also to understand what is material to be reported. So the process is in place. We have more than 300 quality checks automated after the data is published in the systems. And also we have external audits and internal processes to validate manually. So we are seeing that data is an issue, but as soon as more companies are disclosures, exchanges are doing a great job providing guidelines, even in markets that it's not mandatory. So this is really helps, and we hope that we can continue improving the quality of the data.
It's been very insightful. I'd like to get the insights of Manish being an issuer in MSX, a listed company in MSX. When it comes to TCFD reporting, how are companies able to produce sustainability reports with the same rigor, assurance, and global comparability as annual financial reports, and what challenges they face?
Thanks, Marwa. It's a pleasure to be here. Good morning, everybody. See, today, when we look at from a Oman context, today, the mandatory reporting is on CSR and corporate governance. And as my fellow panelists mentioned, and yesterday also, I think each geography has to think through whether which is the best standard, whether TCFD is applicable or which is other best standard applicable for respective geographies. But if we look at it, Oman being MSX being a member of the United Exchange Sustainable part, the same standards are set to apply. And we have seen actually companies very actively sustainability discuss in Oman, both on ES and G. they realize that the climate risk, which is potentially the most significant, but probably the least understood, is a key point which need to be embedded in the overall framework they create. But going back specifically, Marwa, to your question is, what are the key challenges corporates are telling us? I think one which is very common is the data, what we talked about. But before that, before we go data, I think material issues which can be for a present and future impact on the company drivers, their competitive positioning, and in turn actually having a long-term impact on the overall sustainability and the value creation. So first step becomes material issues. What are the key relevant material issues? Linked to that becomes is data, because companies have not dabbled with the data. So they need to work on creating the data. The third part, which the previous panelists mentioned very, very clearly, is disclosures, because once you have the data, consistent of data, how do you ensure that disclosures accurately reflect the performance of the firm? They are not just what we call it boilerplate statements, right? So those becomes very, very relevant. The third element, which the previous panelists again mentioned, is how do you imbibe this into the organization? And that's the key challenge organizations are facing, which is on, do you need to upgrade your IT system? Do you need to increase what KPIs you need to change? How do you actually, or what organization process need to be done? What should be the governing body? And last but not the least, as we have seen, a key developments happening in standards where new standards coming across. So clients certainly need a hand-holding in terms of how do you, which path does one navigate? So looking at Middle East, now certainly there will be a need of the right talent, which can actually help clients navigate through this very critical but evolving phase of sustainability.
That's very concise, actually. So Martin, I just want to pick your brains on your perspective, being from consultancy company, and based on your work with various clients in different jurisdictions and industries. How is the current regulation helping or not the current investor demand?
It is both. It is on the one side helping, on the other side not, because I think before we answer the question is how is it helping, I'd like to go one step back and think about what is actually the investor demand. Now, if we think about investor demand, we see on two dimensions, two differences. On the one side, are we speaking about institutional investors or are we speaking about direct or retail investors? Institutional investors, many of them have incorporated ESG as one of their value propositions. So they have bound themselves to a very clear ESG investing policy. For them, of course, it is very important that they can stick to their promises towards their clients, towards their investors, in order to make sure they abide by the governance or by the regulations they put on themselves. So therefore, they have a very meticulous view on the ESG reporting. Now, this is a little bit different for direct investors, and I come to that point a little bit later again for how do they look at ESG reporting. For direct investors, so far, if we're honest to ourselves, we see that ESG reporting or ESG compliance has very little commercial value. Okay? Looking at two sides from it. From the equity investment side, and there are plenty of studies out there, if you have an ESG stamped investment opportunity versus a not ESG stamped, and the ESG stamped has a little bit lower return on investments, the majority would still go for ROI and not ESG compliance. So therefore, on the equity side, the commercial value is still very little compared to actually the ESG compliance. On the debt side, of course, investors are far more in the driver's seat and have more negotiation power, because they simply take it as an hygiene factor and say, okay, if you are not compliant, you have to pay higher rates. So therefore, it's vice versa. It's the opposite actually on the debt side. Now, coming back to what investors then actually, especially institutional investors, because they are the majority, of course, when it comes to volumes, what they're looking at, and if regulation is actually currently speaking to their demand, I think, you know, if we would ask 5 investors in 5 different jurisdictions, all of them would give us a complete different answer. Because actually there is no standard yet, I would dare to say the investors don't know what their demand is themselves. And in many cases, this is current state at least, is as long as there is some kind of a proof for ESG governance and compliance, it's fine. This will evolve. Now, with increasing standards, and this is a self-enforcing cycle, with increasing standards, people will have a more conform way of measuring things, clearer metrics, and also a clearer way of articulating what is really compliance and not, with certain certificates, etc. So this will evolve, but as it stands right now, it is very difficult to really pinpoint what is the investor's demand itself, and regulation has to evolve to get to that point.
Thank you, Martin. I think your point is very well driven, given what are really the investors' demands. How do you find them? And that brings me to the next question. Again, back to you, Manish. Again, from your perspective as a listed company in MSX, what are the current disclosures sufficient for the retail investors to make a collective investment decision and gain the required information on the company as quickly as possible? And if not, what are the challenges that need to be overcome within the context of regulatory frameworks to ultimately benefit the investor, given what we've heard today earlier from Dr. Nadidi?
Sure. I think today, if we look at it with the ever-changing regulatory framework in terms of new standards and governance coming in, I think disclosures and education to an investor has to be a journey. It will not be a static affair. But if I just go back to the Western world, where the ESG standards and frameworks have been, or reportings have been mandatory in many markets, what has been the experience? And if I just borrow this from a couple of well-published academic literature, there we are seeing that the ESG rating we talked about, the ESG rating disagreement enhances with the quantity of disclosure. So we are pleased, we are saying about quantity of disclosure, not the outcome or the quality of disclosures. Now, if that is a perspective, clearly there is a separate paper which talks about the retail investors get influenced by the quantum of disclosures. So hence a lot of work has to be done in terms of handholding, in terms of transparency, in terms of education for investors to stabilize in. Now, how do we actually achieve it? I think it has to be a participation. It's a triangle participation by all the bodies. So if I look at first from a regulators, now I think everybody's talking about a standard disclosure or standard coming in. Dr. Nidhi has promised now we'll all be smiling after a few months that we'll have a standard format coming in. So that is very critical. So that everybody talks one language, as what Martin mentioned. The second part from a regulatory perspective is, I think it's critical to give transparency and comfort to a retail investor, some sort of assurance from external party on disclosures will add a lot of comfort and credibility to the disclosures. So that becomes a requirement, or maybe I'll say my expectation from a regulator. If we move to stock exchanges, which are actually doing a wonderful job mediating between issuer and a purchaser. The first element will be they need to continue about the education. And I think the forums like this do a wonderful job in bringing various participants together. And I think more engagement has to happen. The second element is where when I hear a corporate hat when I meet a lot of my clients, is hand-holding workshops on disclosures. Because ultimately we know that the disclosures should ideally reflect the firm performance. So how they should be actually interpreted and our hand-holding of that is very critical to be done. And in terms of have active collaboration such a way that any new format comes in, dissemination happen. And I think the third element, of course, going back to the company itself. I think companies can do, we see a lot of materiality issues discussion and data discussions, I think we have a lot of sector forums in each country. If those sector forums can sit together and see what are the critical material issues, how you can actually manage this data, get those data, you can bring a lot of transparency. And one of the factors which is worrisome is how do you compare? And I think the sectors work together, you can bring in consistency and comparability, which becomes a very basic fact for the right disclosures.
Thank you, Manish. I think that's a very important point, the quality versus quantity and comparability across the different sectors, which brings me back to you again, Silvina. The importance of the data, the quality of the data. So what are the current biggest gaps that you see hindering the data collection process? Is it the quality, the regulations or absence of it, the metrics, the calculation methods, or more related to the absence of IT systems to systematically capture and collect and aggregate those information and report it on a broad range of ESG data? You mentioned earlier on the platforms that you have devised for, particularly for issuers, and how is that helping, for example?
Yes, I think that if I'm seeing the data requirements in general, what I can highlight as gaps or challenges for us is the private sector or the non-listed companies that are very relevant in the region, of course, and there is like more work to do in terms of getting enough information from them. It's also very important, especially when we talk about TCFD reporting or climate, is like to have the full supply chain coverage. No, it's the traceability of what is happening. It's not only relevant what or how you are doing business, which at the end is the ESG disclosure. It's with whom you are doing business with. And this is understanding the contribution or the risk you have with each of your partners. So this is the other challenge we are facing, is the traceability on the supply chain. And then the other important thing to mention is we are seeing a trend that on the ESG data, and probably it's an evolution of the ESG data and how to consider the ESG data in general. And it's not only taking the operational metrics, what is doing the company, the picture I set at the end of the year. There is much more interest in the outcomes, in the services, in the revenues generated by companies. So one of the things, for example, that we created is a green revenues model that help to understand by industry sector which are the companies that are having net positive impact in terms of climate or green revenues. So these are the things that we are seeing. It's an evolution of how we are tracking this in terms of the investment demands that he mentioned and what it is required.
Thank you, Silvina, for this. I think that is very important. And we've heard from the issuer's perspective, we've heard from the data provider's perspective. Martin, from your perspective as a consultancy firm, given that you've worked with a various number of stakeholders, be it issuers, be it regulators, be it stock exchanges, what are the current biggest data gaps prevalent in the market and how can we bridge that gap? And as a follow-up question to that, what are the key trends that you're seeing in the market?
Yeah, thank you. I want to follow up on something that Silvia just says which is very important, which is sector specific. I think it's very difficult to speak about ESG requirements and data quality as a general topic. So from a very, very high level perspective, yes, one can say it is quite easy to collect scope 1 and scope 2 data. When it comes to scope 3, things get very difficult because it's somehow out of my hand and we need a neutral entity to verify the data. Now, while the data, when we discuss data gaps, the question is again, what kind of data are required? The requirements are not everywhere clear. Hence, it's not clear actually what corporates have to deliver. So we're working actually in Germany. I would say at least the European markets are one of the most advanced when it comes to ESG reporting, etc. Working with one of the big listed chemical companies, and actually on exactly this ESG reporting and how to collect the data, etc. So it's one thing, and they first of all claimed okay, we have a department, and yes, we have scope 1 and 2 ready, and scope 3 is actually on the go. We're working with our suppliers to get this ready. Okay, this is from the outside. If you start digging a little bit, it's really just on a very, very thin layer, this data is available. The problem is also because no one is really verifying it, and there's no verification entity on a neutral basis who can really say, okay, data is there, that's nice, but how deep and how correct and how true is this really? Because again, if you're in the management position and you're thinking about actually my rating might drop, what are you going to do with the data if it's not neutrally verified? So this is one of the key challenges we actually see. So when we speak about how to close the data gaps, it has 3 dimensions. One is what we said is it has to be sector specific, because data requirements for a chemical company is completely different than for a bank or for an insurance institution. It has to be sector specific. This for sure. The second part is it has to be or we have to be very careful with the size of the organization. Because yes, while, and we've seen this in the European regulation, actually also with the rollout plan, which is now up to 2027, I think, they start with the largest entities. And this makes sense because actually the operational costs for an entity to properly set up a data governance inside the organization is far too high compared to the benefit that is yet there. So therefore, any regulation in the beginning has to be very clearly mandated for large companies who have the scale to simply finance this small ESG department. It's a very practical thing, but this is the second part. The second dimension is size of the company. The third one is when it comes to on the financial service side, on the investment side, we believe there should be a differentiation between the financial products we're actually looking at or financial instruments. It can't be the same for everything. Depends on what you want to do on the capital markets. There need to be also then different types of reporting types that you actually have. So this is more from the data gaps and what needs to be done. On a corporate level, definitely there needs to be a clear push from the top management to drive this initiative and it's an investment in the beginning, because so far ESG is still more a cost item and not a revenue generating item. We hope that this is going to change in the future, but it's so far we haven't seen much value creating ESG strategies. We're working on this as well with corporates, but it's not that easy to achieve. The trends moving forward, it is very clearly going in a direction to be more precise. So we see this, actually regulation is coming, regulation is getting tighter around this. So I think we are at a point of no return, that this is coming in a very strict manner. Usually or traditionally, regulators have chosen either to say we mandate, so strategy is mandate, or is comply or explain. So the mandate is very clearly you have to do it. The other one is you should comply. If not, you need to have an explanation for it. Now, the comply and explain was something for countries actually who started slowly getting into it, but we see a shift towards more mandating, because if it's not mandated from all levels, we believe it will be difficult to really enforce it across the value chain.
Thank you very much, Martin. That's very insightful to see it from different perspectives, different jurisdictions, and the trend is the same in many countries and many areas. It's just about adopting it and adopting it fully, and the importance of the quality data. Which brings me back to you, Dr. Nadidi. TCFD reporting, it carries with it significant challenges and mainly compliance-related challenges and complexities when it comes to scope 1, 2, and 3. Reporting. And how does the new ISSB proposed regulations aim to support that? You captured a number of elements earlier in your first opening notes. If you can highlight that further.
Thank you so much. It's been really interesting listening to my colleagues speak as well. And I noted the one comment about me saying that you're all going to be happy. And given some of the comments that were made, I think you will be. I really think you will be. So TCFD is fully, sorry?
We hope everybody will be happy with the new regulations.
Yes, I'm not saying it's going to be easy, but I am saying that it is going to move us forward. So the comment that Martin just made about, struggling with value creating ESG strategies, what we have tried to do is not just set aside the alphabet soup of acronyms and different standards, in trying to create this global baseline, but really to take the best of each. And TCFD was one of those. It's built into IFRS S1 and S2 with its 4 pillars, which speaks very strongly to, and those pillars obviously are tone at the top is absolutely essential. So governance, of course, and then strategy, and then the risks and opportunities, and then the metrics and the targets, which actually gets you precisely to that point where you're talking about value creating ESG strategies, which is why we've also leaned on the integrated reporting framework, which always talks about the importance of tone at the top, but also very, very importantly, talks about the value creation process. How does the business actually create value? How does it do business? And how does ESG play into that in terms of risks, but also in terms of opportunities? And that's absolutely key. So we've taken our description of what sustainability is precisely from that integrated reporting framework and describe the process of value creation, preservation, erosion as a core aspect of business development and also disclosures. So in that context, and specifically to your question regarding TCFD and S1, S2. So first of all, you know, if you are applying S2 or S1, you are compliant with TCFD. So it really built the 4 core pillars around which those 2 standards are set. Secondly, talking to the question of the complexities of scope 1, 2, and 3 reporting, obviously we had to build in scope 3, that's 70% of emissions. And yes, of course, it's complex to understand exactly where you're valued and also to incorporate your entire value chain in terms of data collection. And so in this regard, what we have done is, one, not just listen to the fact that investors need that data, but also build in the use of estimation, release to help companies, especially with scope 3 at the beginning, introduce guidance so that hopefully with time, it actually becomes easier. And while I have the floor, what I wanted to talk about as well was the question that Martin raised about sector specific being so important. That's where we've leaned on the SASB standards, where there were 77 industry metrics. So you'll see that S2 actually has sector specific metrics to assist and support on climate related reporting. And in this regard, I wanted to challenge Martin when he says that actually an investor may look at an ESG compliant and a non-ESG compliant entity and choose the one with higher ROI in spite of the fact that it did not take into consideration sustainability related risks and opportunities. And I'm pretty sure that even if that were still the case today, that's going to change very quickly, because it's not just about compliance. It's actually about evaluating business opportunities and risks. It's about building business resilience. It's about ensuring good governance and taking advantage of opportunities like the ones that you raise. In the next decade, 100 million young people between the ages of 19 to 23 or 24. Is that a risk or is it an opportunity? And from a social or human capital perspective, how does one actually take advantage of that opportunity, and to what extent are businesses preparing themselves in terms of some of these relative intangibles that could be significantly and financially material to the business going forward? I mean, what we're also working on is the digital taxonomy, which will enable comparability, and also with the tagging of information. The whole objective is to ensure that ESG and sustainability related and climate related disclosures actually become more and more decision useful information that is comparable across jurisdictions and interoperable with various other mainstream standards. For example, you talked about Europe and ESRS. We've been working very strongly to ensure that S1 and S2 is interoperable with the European sustainability reporting requirements, so that truly it can serve as a global baseline and jurisdictions can key into that global baseline, and it can serve as a baseline for comparability, but also as a building block approach. And hopefully that will indeed enable us make better informed investment decisions in the future. And I think what's really important is just to look at it from an ecosystem point of view. There is work for everyone. The auditor and assurance committees are going to, and standard setters are going to have to ask themselves, how will this be assured? The various jurisdictions that are on standby for adoption will have to ask themselves, how do we best adopt this? And I think it's our job to be on standby to support you. And that's the reason why at COP27 we launched the partnership agreement, so that essentially we would be supporting jurisdictions, not just issuing the standards, but actually also getting out there like I am today to engage with you and make this journey slightly lighter.
Thank you. Thank you, Dr. Nadidi. I'm aware of the time limit, so we'll just wrap up with just a final note, and for you may allow me 40 seconds just to close. So what we've seen today is that 2023 is becoming the year of ESG. Not only is it only becoming mainstream, but it's starting to drive markets a lot more. And the main driver behind that is that a core part of the financial systems globally, i.e. the regulatory bodies and central banks and stock exchanges are becoming more and more focused on topics such as climate change and diversity and inclusion, as well as social aspects. We have seen that in 2022 and a more strongly prominent in 2023. It's a lot less of a policy-driven market in the West, and a more of a being driven by asset managers and financial institutions, and how companies can differentiate themselves. While in the MENA region, what we're seeing is that it's being more driven by regulatory bodies and central banks. In the near future, we expect that the International Sustainability Standards Board to become the global standard bearer of ESG disclosures, based on what we've heard today in today's panel. So if you may allow me 40 seconds just to close each speaker.
Yes, so I think that in my opinion, what it is really important is the concept of ecosystem that the doctor has just mentioned, the collaboration between all of that different stakeholders. Data, in our perspective, is just the beginning. It's all about having the correct base to create products, to get more visibility, to aggregate that data, to make better policies, and also to help companies to understand where are they in the transition and get financing to do so, and commit with all the pledges that all countries and all entities agree.
Yeah, thank you. So ESG will be very, very crucial for investors, and the MENA region, when we want to attract international investments, we have to be adapting it very quickly. So this is one thing, actually, we have to adapt it quickly. And we believe that stock exchanges can play a crucial role in setting very simple standards that actually help corporates how to abide, how to at least do the minimum. And then the strategy here would be very clearly get out something quick and then build the depth. I would not wait to first build depth before getting out actually the initial reportings, but get out something quick and then the rest can come actually later.
The purpose of the firm clearly has actually changed from improving profits only to maximizing the value for all the stakeholders. Now, with that happening, and the businessing being globalized and stakeholders being international, I think the standards which the corporates or the regulators will have to act, or maybe exchanges would have to adopt, will keep on increasing because multiple geographies. As everybody said, sustainability ball is on the roll. I think we just all need to adapt, ensure that we invest in the respective organization processes such a way that we have the right data, clear disclosures, which clearly reflect about the management effectiveness, financial performance, and goes a long way in creating value for the shareholders or stakeholders.
Dr. Nadidi, if you can just wrap up in less than 30 seconds.
I'll do it in 10. I'll lean on Lamia Harizi's words and just stand fully behind the ask for, we want one global standard and we want our standards. That's what I heard her here. That's what I heard her say. And that's what I've heard from various others in the region. And I think this is exactly in alignment with the objectives of the International Sustainability Standards Board. And I think it's our job to ensure that what we are trying to build together with global stakeholders as one global baseline, that it suits your purpose. And even if we don't make that in the first step, the whole point is this is a journey, it's a suite of standards, and we're here with you and we're here for you to work with the range of stakeholders and to make this happen. I think we have a golden opportunity, all of us, and I think we just need to seize it.
Thank you. Thank you, Dr. Nadini. And I'll just wrap up, as you said, it's a journey, not a destination. So we've all heard it from our esteemed panels. Thank you all for joining us. A big round of applause to our panelists. Thank you.